You are listening to C-Suite Perspectives, a podcast by the Conference Board.
Welcome to C-Suite Perspectives, a signature series by the Conference Board. C-Suite Perspectives are conversations that take an objective, nonpartisan look at a range of subjects that matter most to business leaders. I'm Dr. Lori Esposito Murray, co-chair of the 2024 Distinguished Leadership Awards and former president of the Committee for Economic Development, the Public Policy Center of the Conference Board, and guest host of today's episode. In today's conversation, we will discuss leadership in challenging times, where we feature the outstanding CEOs who are recipients of CED's Distinguished Leadership Awards for corporate citizenship and business stewardship. Joining me is one of our 2024 honorees, Jenny Johnson, President and CEO, Franklin Templeton, one of the world's largest investment managers with over 9,000 employees. The company was founded by her grandfather in 1947. Jenny joined the firm in 1988 and held leadership roles across the company before becoming CEO in February of 2020. In her career spanning over 30 years, she's been a key driver in the company's transformation to what is now one of the most respected global firms focused on investment management, technology and innovation, diversity, and corporate and social responsibility. Welcome, Jenny.
Well, thank you. It's an honor to be here. So really appreciate this.
So let's get started talking about the rapid change and challenges. Your tenure as CEO began in 2020, as I just mentioned, just prior to the World Health Organization's declaration of the global pandemic. And since then, as you know, probably better than all of us, the challenges have not stopped. So what are the key leadership principles that you rely on to help you lead during these rapid changes? And really, basically, how do you plan for the unpredictable?
So I would say that I call it my 4 Ps of leadership: people, passion, purpose, and persistence. Number 1 is no leader is successful without a great team. And, I think that's probably the most important thing, is just to surround yourself with the right people. And then passion, love what you do, and it doesn't feel like work, because, if you're going to be a CEO, you're going to work a lot of your life, a lot of your weekends are going to be working, so you better love what you do. Purpose, describe what you do in a purposeful way. And so at Franklin Templeton, we say we help people achieve the most important milestones in their lives. And people can rally behind that idea. And I share a story about, and it really kind of turned it on for me as far as understanding how important this message is, when I was talking to my kids, and I said to my daughters, any of you going to follow me in this industry? And my daughter goes, "Oh, Mom, I want to do something that helps people." I was like, "Are you kidding me? I've failed to tell you how important this is in helping people." So that's the purpose. And then persistence. Look, you're going to make mistakes, especially times that are as trying and to challenging, and also of great technological disruption and change. And so you're going to make mistakes in that process. And honestly, I think the difference between being successful and not is when you do stumble or fail, picking yourself back up and just heading forward and not being afraid to keep leading.
So picking up on the importance of purpose, and the purpose being to help people, the increase in risk that this unpredictable world is now thrusting upon us has really accelerated. And risk management is a core principle of your company, of your industry as a whole. As the world transforms, both politically and economically, has your definition and calculation of risk changed with that?
So, our firm, we're 1.6 trillion in assets, but we're primarily an active manager. And so being an active manager, it's all about risk-adjusted returns. And so you do try to look at what are the big themes that are happening, some of the changes. We've done 10 acquisitions in the last 4 years. They've all been designed to what we think are big secular changes, things like private markets, more customization in client portfolios, and so leveraging fintech. So you're trying to ride those waves. And so I think, identifying kind of what are the big themes that are happening right now. So I call them the 5 Ds: demographics, so aging populations in developed countries, young populations in developing countries. So demographics, deglobalization, we all saw what happened with COVID, and you know that companies learned they can't have a single country risk on their supply chain. So there's diversification of that. So that's becoming a big trend. Decarbonization, you have governments representing 90% of the world's GDP committing to net zero by 2050. So there's got to be big investments there. Disinflation. So I needed a D, so we'll call it disinflation, but it's where are US interest rates going based on inflation? Because the reality is wherever US interest rates are, that has an impact on the rest of the world economies. And so being able to track that and understand that's important. And finally, I'll call it digitization. And I think the two big trends in technology, both AI and blockchain, are hugely significant and transformative. And so if you're doing from an investment standpoint, you have to understand those risks and make sure that you're positioning portfolios to optimize in those environments. And part of that deglobalization is just the geopolitical risks that we see. Obviously, the two wars that are going on, the US-China tension. So all those kind of play into that. And our job is to, honestly, to our investment teams to make a call on what their views are and to make investment decisions to try to optimize the portfolios in those in the times, considering those risks. And that's been at our core. The one thing I tell people that hasn't changed is you never can predict nobody predicted the pandemic, at least as what it played out to be. I don't think anybody predicted. I talked to folks who I thought knew pretty well that Putin was going to invade in the Ukraine because it didn't seem to make a lot of sense. We can't predict these things. And so having that diversified portfolio is as important as ever to be able to position yourself for this kind of environment.
And then, so you have the unpredictability, you have the purpose, you have the increase in risk, and you have a legacy company. And Franklin Templeton is one of the world's largest investment managers, and a significant amount of that growth has happened under your tenure. So what have been some of the components of that success in moving a legacy company, a legacy culture to achieve further success and to deal with these changes?
So, as you mentioned, my grandfather started the company in 1947. You don't survive for, 75 plus years without being innovative, without identifying trends and making sure you position the company for those. I have to tell you, though, probably the most important lesson that's been carried down in my family is my father has always said, take care of the client and the business takes care of itself. So you have to be able to be close enough to your clients to understand what their needs are, focus on those things, and the rest of the business, and make sure you're delivering on those, and the rest of the business takes care of itself. So positioning the company under my tenure here, and also even before that, because we had identified a lot of these trends before I became CEO, was recognizing the reality of, say, private markets. The changes in bank regulation has just meant that banks can't lend like they used to lend. So that has created this huge proliferation of private credit. So we knew as a traditional fixed income manager that in order to truly serve our clients, we had to add that capability. And that was a different capability than we had. And so we acquired two companies, Benefit Street Partners and Alcentra, in that area. The same thing goes in private equity. Companies are waiting much longer to go public. So recognizing that you needed to have capabilities on that side, we ended up entering the private equity space in what's called secondary private equity. But I don't see that trend. In 2000, the average company went public after 3 years. Now it's anywhere from 10 to 15 years before companies are going public. So those early growth years that used to be captured in the public markets are now captured solely in the private markets, which is also why we're passionate about figuring out ways to democratize and provide responsible delivery of those very illiquid assets to the average investor, because the returns for that illiquidity are pretty significant if you're trying to save for retirement. And then I'd say finally, it's the trends. And I think this is a hard thing for public companies. The average CEO, one is you have to be focused on quarterly earnings. And if your tenure or your window is 5 years, you're not spending your capital resources on things like blockchain, which we think will be the rails of most of financial services. But at Franklin Templeton, because we still have that kind of founder mentality, the family still owns a significant portion of the stock. I think it gives me that flexibility to really think about those things and invest there. I mean, honestly, the work that we're doing in the blockchain space probably won't pay off for 7 to 10 years as far as it being material to the firm. But if we don't do it now, we may not be positioned to be successful. And that's when you actually wake up one day and you realize you can't compete. And so you have to invest those, really planting those seeds and cultivating the garden, even though they're not material in those areas of great disruption.
That's really fascinating about the importance and the significance you're putting on longer term thinking as far as technology and the advances in technology. On the flip side of that is, of course, the risk, and the risk in the financial sector is obviously the cyber threats, which are accelerating both with the advances in technologies and also the global tensions. What advice can you share on how you're managing the challenges of the cyber risks while also recognizing the importance of being really fast and focused on how to utilize the technology advantages on the positive side to deliver trust to your customers?
Yeah, no, I think this is as I say to my board, I put it in my, one of the top risks in a firm. And, when I ran technology, I always said to people, I never turned down the budget for the cyber security team. Because you have to make sure you're investing in this space, and you've got to continue to ensure that your team is staying aware, that they're tied into networks of information so that they understand the trends that are happening there and that you're investing there. And I said one of the challenges, honestly, in the case of running an environment that to protect your clients' research, because we are only as good as our clients trust us. And so it is so important that they know when their assets are with us, that they can count on us really protecting those assets. And so one of the things that you do in cyber is you create a lot of layers. And so there's always going to be breaches on the outer layer. The question is, do you catch it before anything happens? And so you build these layers, but staying in the network so that you understand where breaches happen in different markets so you can, build up your wall is really, really important. And then I do think on things like, so one of the reasons I'm a fan on the blockchain space is the way in which the distributed ledger is structured, where you have people who are validating transactions are independent from each other and they build their own enterprise architecture around their own security of that node. That's going to be a great protection, I think, to the financial services as that becomes more and more important in our financial system. And then I think AI, the bad actors are going to have AI, so you better have AI to be able to identify threats, and you better be investing in that in your cyber area so that you're able to protect yourselves from the bad actors.
We're going to take a short break and be right back with more of my conversation with Jenny Johnson.
What does the future of work mean for your employees? How will your company navigate ESG? Will there be a global recession? At the Conference Board, our experts translate the latest research and economic analysis into insights and real-time problem solving for your organization. Membership at the Conference Board provides your team with an assortment of knowledge, from economics, marketing and communications, ESG, public policy, and human capital. As a member, you'll have access to our center experts, member-exclusive events, data and benchmarking tools, and peer sharing that will help you understand the present and shape the future. Consider becoming a Conference Board member today by visiting www.conference-board.org.
Welcome back to C-Suite Perspectives. I'm your host, Dr. Lori Esposito Murray. I'm joined by Jenny Johnson, President and CEO of Franklin Templeton. Steering through all of your answers or your concern about your team, making sure your team's informed, educated, prepared. I'd like to turn to the core of company culture, which is so important to your leadership and the commitment to inclusion. And if, again, you could share some of the key components that make your culture a strong one for your employees.
Yeah, I mean, this is a lot of question when you acquire so many companies in a short amount of time. How do you sustain the company's culture? And I always say, look, the investment banker will tell you why, it's a great strategic fit, why it's a reasonable price, but they'll never talk about culture. And our experience is you cannot take two firms with cultures that clash and think that they're going to be successful, even if they're a good strategic fit. And so we spend a lot of time on any of our acquisitions, really understanding the people, understanding the culture of those firms, and making sure that they will be a fit in our culture and that they share the same values as we do. And I would say, our culture, we look for kind of 3 Cs. So clients, do they talk about clients and why they're there and what their mission is to help clients? Do they have a collaborative environment? Do you get a sense that there's already fiefdoms in the company? Because if that's the type of environment, that's going to become a cancer to your organization. So are they collaborative? Because we think that we're only as successful as our teams can work with each other. And then finally, do you have the mindset of continuous improvement? You have to have that growth mindset where you're constantly looking to say, how can we get better and better? So that's what we look for as part of the culture. And then, I'm a big believer in diversity of teams, because in the asset management business, look, we're just a people business. Our greatest asset is our teams. Our clients are diverse. The companies that we invest with are diverse. And so, and the investment opportunities represent all types of folks. And so we think you have to have diverse teams so that you can find investment opportunities. And I can give stories on examples of where I think you could, where it's demonstrated. And I think you have to have a client service team that represents a diverse client service team, so they relate to your customers. So the key in the difficulty in financial services is, honestly, this has historically been a very much a white male type of business. And so, when you look at it, I always tell my team, look, I don't want to go and poach from my competitors, because that doesn't do anything to help the industry. So we have really focused on that pipeline. And what you see is, like, girls fall out of their interest in financial services as early as high school. So we actually work with nonprofits to bring in high school girls where they get to spend a little bit of time doing an internship on site. They get some financial education in hopes that they can envision themselves in this industry. And we do work with historically Black colleges and universities, for example, to be able to bring interns in, because what we find is, if people don't see themselves as part of this environment, if you didn't have a mentor, or you didn't have family members that were represented in this industry, you don't actually envision yourself as being in this industry. So we're trying to change that and bring folks in earlier and just expand that pipeline. And we think that's really important, because our clients are represented by that same demographic.
That's really interesting. And a lot of the data is showing that type of experience, the internships, the apprenticeships, really, that experience is changing lives. I want to take you back to your when you were listing the challenges in the beginning, talking about decarbonization and the climate issues. Franklin Templeton has actually been rated as one of Barron's most sustainable U.S. companies, and this clearly is a priority for you. Can you explain to us why and how you're incorporating this into your business operations?
I mean, honestly, partly it's just good business, right? To be more efficient. And so, but it's also good for the environment, but it's also good business. We've actually managed to reduce, I think, in half our operational carbon footprint since we created a baseline in 2007. It's just been an area of focus for us, as we've been able to renovate buildings that we're in, or move into new buildings and set, criteria with a landlord and saying, this is the kind of environment that we need to work in. And it's something that we've elected to report publicly through our what's called our CSR report, our social responsibility report. And we're big believers that if you can be public with that information, you're going to be better. Anything that you want to improve on, you better be willing to measure it. So it's just been an area of focus for us. But again, I think it's partly just good business.
And so, as a final question, looking at, and you were just talking about the importance of bringing in young girls, young women in the industry to actually see themselves in a role. Who were the most important role models in terms of your interest in this sector, your leadership values? Who influenced you the most?
So no question in my mind that it's my parents. My mother had 7 children and then went back to college and graduated from Stanford Medical School in the 1970s when I think there were 10 women in her class in med school. And, just was a force and continues to be at 88, a force of nature. And so that was always inspirational. I always get to say to people, I'm a second generation guilty working mom. And then my father, who genuinely, even to this day, he is a great resource to me as I ask him questions about the business. Will never tell me what to do. He will give his view and advice, and he's also honestly one of the most genuine, warm, thoughtful people that I know. So you could be, he taught you could be a good businessman, a successful entrepreneur, and have a tremendous heart and, incredibly wise man. So I have to say, without a question, that it's my parents.
Oh, that's fantastic. And I'm sure they're very proud of you. And we are very proud on behalf of our trustees to be honoring you and Franklin Templeton team this year. Thank you so much for that privilege. And it's been fantastic having the opportunity to talk with you.
Well, thank you. And again, thank you for this honor. It's amazing.
Thanks to all of you for listening in to C-Suite Perspectives. Every week, we'll be joined by a prominent thought leader to provide insights on the issues of our time. We'll cover the leading topics in economics, public policy, ESG, human capital, and much more. Please share C-Suite Perspectives with your colleagues. I'm Dr. Lori Esposito Murray, and this series has been brought to you by the Conference Board.
You have been listening to C-Suite Perspectives, a podcast by the Conference Board.